Hi everyone, my name's Leandra. So what I'm gonna do, I'm gonna show you how I hedge on a lower time frame on US30 today. So this is the hedge position that I did on US30. But before I show you on the 15-minute time frame how I got to this hedge position, I need to go back and show you on the higher time frame my overall bias for how I got into this hedge. So this strategy can be used on a lower or higher time frame, but I prefer to use on a lower time frame on US30 when I see a hedge opportunity become available. So what I'm saying is that sometimes these opportunities don't become available, but when they do, I don't mind just getting in for a little hedge position, either like it might be a big hedge or it might be a small hedge like this one on the 15-minute time frame. But yeah, the opportunity the setup has to form for me to actually do this hedge setup. If it doesn't form, then I'm not overly looking for to hedge like on a 15-minute lower time frame or like any lower time frame. The opportunity really has to become available. So first, I'm just going to go into trading view. And I'm just going to go into US30 and I'm just going to look at the overall week. Might look a bit messy for you guys, but then I'm just going to start and then go down to the daily. So all my annotations. So I'm just going to pick up where we left off on Friday. So this long bearish candle, this the last one that's just formed, that is the last Friday candle. So as you can see, it the candle went into the Sunday opening price back where US30 opened on Sunday, and plus it's tapped into this 16-hour bullish order block. So 16-hour bull OB, that stands for 16-hour bullish order block. Yeah. So but my overall bias for US30 for the week was to go up into this. Let me go back to the week to show you. Go up to this monthly. If you can see that. It went into this monthly bearish OB. So this purple box is a monthly bearish OB. And then I also had a 4-day bearish OB and another 4-day bearish OB, which it ran through. And then it hit this the bottom of this 4-day bearish order block within the monthly bearish order block. So firstly, I know the overall market structure, which means I know the direction of the market. The direction of the market is trending for this pair. So I know that at the start of the week, so if we go back to the daily, at the start of the week, on this candle here, we can see that it's at the bottom of this purple box, which is the monthly bearish order block. So we have an idea that, okay, cool, price is going to push up into this monthly bearish order block. Then we had some news that came out on Wednesday, I believe. Which was FOMC meeting minutes. We also had the core retail sales on Wednesday, and then on Thursday we had the Philly Fed. So the news could have pushed the price through this monthly order block, or it could pushed it back down. But bearing in mind, it's a monthly bearish order block. So the higher time frames have a greater influence on price and structure in the market than a lower time frame does. So I know that, okay, at the start of the week, Monday, Tuesday, when there was no news, price is going to run into this monthly order block, and then I need to go down to a lower time frame and see if the price, or wait till after the news and see if price is going to push down or continue to rally higher and continue bullish. So if we go to the 12-hour, because that's a better time frame. Yeah. So if you can see, I had a marking, I had a position for a buy on Monday and Tuesday, to go up into this monthly order block. Then after that, I was waiting to see for sells. So I should have got in at like 34103, but I didn't because I was thinking it's still going to buy, and I had a busy week, so I wasn't really paying attention to the news, and I wasn't on a funded account, so I was just seeing what price was going to do for the week, if it was going to rally higher. But when it came to Friday, Thursday, Friday, I came out my positions on Thursday, and then Friday I went in for sales. So towards the end of the week, so on Thursday and Friday, US30 start to form a more bearish trend, and now it's hit this monthly order block. It's more likely to be a stronger bearish trend than just a pullback or a retracement. So this might be an overall reversal, but we need to go on a lower time frame. Actually, the higher time frames will probably tell you that, to show that it's an actual reversal instead of just a retracement or pullback. So, but on Friday and Thursday, on Thursday was a Philly Fed, and on Friday there was no news, so price just continued to sell. So that's confluence like number one. So now I know the overall market is a bearish trend. So I was looking for entries, areas to take a sell position to the downside. So I had to look for where I was gonna put my sell position in, and also where my take profit was gonna be. So if we go down to, so as we can see, there's a 16-hour bullish order block right here, and I've marked that up the Sunday because that was Sunday's opening price as well. So there was liquidity all in this area since Monday to Friday. There was liquidities resting underneath these candles for the week. So it's most likely to pull back into this bullish order block, 16-hour bullish order block. So if you're going down a lower time frame, let's go to 6 hour. So obviously it's going to see smaller bullish order block. So there's another bullish order block there, which price tapped into completely. And if we go down to the 4-hour, we've got a bullish order block, which probably just covers the 50% of this 16-hour order block. So my so when I was trading this setup, I went over to MT4. I think. Into my MT4 account. And I saw that on the daily, I couldn't see any order blocks. I could just see bullish green candles going up. So I needed to go down to a smaller time frame. So I went down to the 4-hour, and on the 4-hour, I could see a bullish order block, which was this line here. I'm just going to mark that as yellow. Let's mark that as yellow for now. Yellow. So that is the 4-hour bullish order block. So my expectation is that price is going to come into this 4-hour bullish order block, and that's going to be my take profit. But with this trade, I know that price has entered a monthly bearish order block. So I know that price is going to continue to sell, probably at least to this next order block here, this next bullish order block. Might not be today because it was Friday, but I know that price is going to come to this bullish order block here. So I'm going to change that back to pink because it needs to be pink for me. So when I saw that price was headed towards this 4-hour bullish order block, I went down to a lower time frame. So I went to the 1-hour. So on the 1-hour, it looks like a fair value gap. There's a fair value gap form there. So I know that definitely needs to be filled, and price is most likely going to come to this pink line here. This one here that I'm tapping. So if we go down to the 15-minute now. So let's go down to the 30, take this gradually down, and go down to the 15. So we've seen the 15. So I want to just play this out. So price started to drop. I got in for a sell position, but I got in really late for my sell position, but I knew that price was going to continue to drop. Not as far as I wanted it to, because I knew it was a Friday. It's probably going to retrace back up a little bit, but it will continue to go down. But I know my overall trend for this pair is bearish. So I know that price is going to continue to sell. So let's keep that in mind, that price is going to continue to sell. It's not going to fully do a retracement to the upside for any buys, but it will do pullbacks. So here we can see multiple bearish order blocks on the 15-minute. Go back down to 1 hour. On the 1 hour, we've got the closest one to where I put my entries is this one here, that order block. But if we go down to the 15-minute, we can see more action in price. So when I saw price go down to my pink line, which is this line here, and then it created this candle of this bearish candle that shot down, which means price is shot down so quickly that it's left an imbalance between there, and there's an order block above. So let me just go into my. So this is what I saw on the 15-minute, which made me go in for that hedge position on the 15-minute time frame. So let me just have a look. So there's my markings from what we did on Friday in the girls' class. So I'm just going to mark this up again and show you guys how I got to this 1, 2, 3, 4 confluence. That price was going to hedge back up to this 15-minute candle and then continue to push back down. So let me go to this 15-minute screenshot that I did. So like I was saying, when price made this displacement candle on the 15-minute and went down to 33713.3, that is my area. That is the top of my 4-hour bullish order block. And price is already inside my 16-hour bullish order block. Bear in mind that price is in an overall bearish trend, and it's already entered a monthly order block. So the higher time frame has more authority over the lower time frames. So they're always going to have the higher power over any other time frame. So the 16-hour, even though it's a 16-hour, it's still lower than the monthly time frame. So price is going to pull back or retrace, but it won't do a reversal. It won't do a reversal. I'm saying that with confidence. I never know, it might do a reversal. You never know what if news comes out, because US30 is built off news. So when this 15-minute time frame, we know that it's tapped into a monthly time frame. Price is now in a bearish trend, and we've come to this level of 33713.37, which is the top of our 4-hour, what we can see on MT4 anyway, our 4-hour bullish order block. Price is now formed. This one goes. Price has now formed this displacement candle going down. Yeah. And it's hit this 4 hour. Let me see. So prices hit this 4 hour bullish OB. Yeah. And then prices also created this is what when I mean by the opportunity presents itself, because it's created, prices drop down into this 4 hour bullish OB. Okay, we get that. We can, take profit if we want, or as we know, that price is in a bearish trend. So we can, well, I held these sells because I know it's going to drop further. And it's hit a bullish order block, so it's going to do a pullback because I see this 15-minute bearish OB. So that's a 15-minute bear OB. That's a 15-minute bearish OB. Yeah. So prices pull this displacement candle, tap my 4 hour, bullish OB. And then it's also formed this 15-minute bearish OB. And then what's given me another confluence that it's going to pull back to this 15-minute bearish OB and then start to pull back down is this bullish order block right here. This bullish order block right here. Let me do from wick to wick because it's been wicking me out nowadays. So 15-minute bull. Bull OB. So we've got so prices form this displacement candle, touch my 4 hour bullish OB, bullish order block, and then price has now been a bit ranging to the side, and then it's created this 15-minute bullish OB, and I can see a 15-minute bearish OB. Yeah, so we've got 4 hour, a higher time frame, so we're a high time frame bias, and then also it's inside a 16-hour bullish OB, so inside It was here. So it's inside, price went inside this 16-hour bullish OB. So it's tapped in, so it's now in this blue area. Yeah, so back to MT4. So that's more confidence that price is going to pull back higher, which then I can get in for a better sell position or more sell positions to take lower. But in this case, I'm just hedging, so I'm going in for buys. So I'm looking for entry points for a buy. So once I see this bullish OB, that is my signal that I can enter when I see the third candle, which is this candle here, pull back into this bullish order block, the red candle. When it pulls back into this bullish order block, I can then go in for a position for a buy because I know that it's going to price going to pull up to this bearish OB, so I can get in here and take my buy to here. Right, okay, so we know we can do that. Okay, so we have one confluence here, two here, three here, and then we also have four. So I'm going to take those off and show you four. So four is one of the easy ones. So four is this not too much purple, I think it is. Thinking orange. Yeah, there we go, it's orange bell. So four is this fair value gap. So we have a FVG or imbalance because this candle has pushed down so quickly that it hasn't given any candle time to come back up and mitigate this imbalance in here. So we have a 15-minute FVG that needs to be filled because this is a lower time frame. So if it was a higher time frame, it might get filled in a couple of days, couple of weeks, but this is a lower time frame, and we know that price is pushing down. So we know that price is in an overall bearish trend, and we know that we've now touched this 4-hour bullish order block. So I'm gonna turn to light blue. So we know that price is pushed down into this 4-hour bullish order block. So that's one. That's confluence number one. Number two, when it pushed down, it's formed this 15-minute bearish order block. So that's number two. Why I'm saying this is number two is because these candles have not formed yet. So imagine that it's all you're seeing is this in price. You can't see anything else. So you don't know if this candle here might be a little pullback and then price might just drop back down for the sell. So that's why we have one, the 4-hour order block, two, the 15-minute bearish order block, going to put you can class 3 as this displacement as well in price. But our class this as 3 is the 15-minute bullish order block on the lower time frame. So got a 3. And then you've got 4. So 4 is the fair value gap. So 4 is the fair value gap. So we know now that we're in a bearish trend. Price is pushed down with momentum into a 4-hour bullish order block. We are within a 16-hour bullish order block. So that's even more confidence that price is going to pull back or retrace very soon. So now it's formed this displacement candle, hit the 4-hour order block. We've got a bearish order block above. So we're making higher lows. Price is pushing down. We've got this displacement candle pushed down to this 4-hour order block. We can see that there's a 15-minute bearish order block. Okay, we don't know what's going to happen next. Price might just push back down, or we see it consolidating and making these, or ranging and making these candles here. We then see a 15-minute bullish order block. So this is perfect. So now we can think, okay, cool. We can get in for an entry around here when wherever this candle is going to drop into. We can get in for entries here. Probably you can look on a lower time frame, because it's the 15-minute. You can look on the 5 or the 2, the 3, the 1 to get in for more of a sniper entry. But as you can see, I entered a bit too early. I entered on the second candle, not the third candle. So that's my fault. But and I was entered multiple positions of 0.01 lot size because I had I was in the minus, so I just wanted to get rid of that minus quickly. But that is not a good way to trade. Like I said, that risk, make sure you manage your risk and you know how much pips is from where you get in to where you're getting out here. Or you can just see that there's a fair value gap and then just enter at the bottom of the fair value gap and then just exit at the top of the fair value gap. So and that's all you would trade when you're hedging. You don't have to get in when you see that this bullish candle. If you want more confirmation that it's actually going to mitigate this fair value gap, then you can just wait until price enters the fair value gap, and then you can get a little pullback and then take it all the way to the top of the fair value gap and get out. That's what I like to do sometimes. It's just more confirmation that's probably on confirmation number 5 when it enters the fair value gap. It's just that you know for sure that it's going to go to this 15-minute bearish order block. But because this setup is so perfect, because the overall higher time frames on the monthly is bearish and it's happening to a 16-hour bullish order block, on these lower time frames it's definitely going to retrace because it needs to make more high lows. And it's Friday afternoon as well, so price is definitely going to go lower, but it's definitely gonna be quite a few retracements going towards the end of the week now. But I wouldn't say it'll be a reversal. I'll say it'll just be a retracement because there's no news and it's near the end of the week. But that is basically how I hedge, and I make sure that I know where I'm getting out. So I did a safe bet on the 15-minute order block here. I didn't do this bearish order block here because it did this sharp displacement candle. Price, this is showing me that the sellers are strong in the market, and this is an overall bearish trend. So it's showing me that sellers are strong in the market. So it might not pull back, or retrace all the way to this bearish order block. I don't want to risk it. If you're getting for a good position in this order block on a good lot size, and you're risking the right amount, you can just take it to here and then, be out. Done. That's it. So yeah, I just make sure that I have multiple confluences that it's definitely going to pull back to my exit area. Yeah, that's the same as what I did earlier. Yeah, so this is just a video of the hedge position that I did. So this is on the low time frame. So let me just go back. So the reason why I did on this video, why I switched between time frames is because I'm normally on my laptop on TradingView. So I'm normally looking at the 1 minute, the 5 minute, and the 15 minute. So I'm looking at the 1 minute on my phone, and then I'm looking at the 5 minute or 15 minute on my TradingView. So I was just working off my phone on Friday, and I didn't open my laptop all day. So this is why you see me changing in between different time frames. So as you can see, I've got sells in and I've also got buys in. So these are the buys that I've got in. So now price is entering that fair value gap. See on the 15 minute. So it's now in the so price is now in that fair value gap. So that's the 1 minute. That's how it looks on the 1 minute. A bit choppy on the 1 minute. This is on the 5 minute. This is on the 1 hour. On the 1 hour, you could go for this bearish order block, but because I'm working off a lower time frame and I'm not trying to risk my positions taking it all the way up to this hour bearish order block and then it just doesn't happen, I'd rather stay safe and do the smaller time frames to know for certain that it's definitely going to go to that area. And plus it had multiple confluences that it definitely was. So this is on the 15 minute when it's inside the fair value gap. So as you can see, price is tapped into the bullish order block, and then now it's going up to this bearish order block. So you can see 3, and then it's in this fair value gap, and then it's going up to this fair OB, and then this is the 4-hour bull OB. So you can see that again, how it's just playing out. I'll get rid of that quickly. Yeah. So here, I saw price, yeah, I saw on the lower time frames, I think it was on the 5. Yeah, let me pause this. Oh, sorry, I thought that was my list. So let me pause it here because a lot of people get trapped here. So like I said, I was expecting price to go to 33783, which is the bottom of my 15-minute bearish order block, that white line. I don't think I can annotate this. No, I can't. Which is the bottom of my 15-minute bearish order block, which I'm expecting price to go to. And in this pink box, you can see the pink box. Yeah, here we go. So in that pink box, I'm expecting price to fill that fair value gap. So that's my 15-minute fair value gap. What caught me off guard here is why in the next few clips you see me taking out my trades is there's a little gap, and I start to I use a line to see where there's fair value gaps in the market. You'll see it in the as I play this video. It's because I thought that, oh, have I missed something? Because have I put this fair value gap to have I made like a extra large fair value gap, and have I missed out where price is gonna, where this fair value gap ends, and where the 15-minute order block starts, the 15-minute bearish order block starts? Because see that wick there, and that's a little gap between that purple line here. That's the fair value gap, is this top pink line. The white line is my take profit target. So price didn't reach the pink line, the top of the fair value gap, and it didn't reach the 15-minute bearish order block, but it started to pull back. So I'm thinking, what is going on? What is going on? Okay, maybe it's not going to go to the top of this fair value gap. So in the next few clips, I started to take out my positions because I didn't want to go into a drawdown, because I got in these positions a bit too early, and I should have waited for the pullback to get in for a better position for the buy. So that's why you see me getting a line. I just get a line to see if there's any more gaps that needs to be filled, for more confidence that, okay, I can leave these buy positions in and take them to my designated take profit, which is 337,738, that white line. So yeah, I'm just going to play that out. I thought I'd just explain that because I got scared, and I was thinking, oh, I didn't want to go into a drawdown, and then you see the price going back up towards the end of this video, and then I just keep the positions in. So this is when I start using the lines and to see where the gaps are, because I start to get a bit scared. Just because my analysis was I thought was solid, and I was like, oh, maybe it's not. But then price started to go back up, and I saw those gaps in the market, so I just left my positions in, my buy positions in. Yeah, so this is when I start to take my positions out, because I see that price might be going back down. And what gave me this idea that price was going back down is because it went up, candles up, whatever direction the market's going in, candles will always go in the opposite direction, then start to go in the market trending direction. So when it started to go, the candle started to go bullish, and then it started to revert for a sell. I was thinking, oh, maybe it's starting to go back down now. It doesn't want to go any higher and meet this bearish order block. But that's just me. Sometimes you gotta trust your analysis. And it, again, on the 15-minute, it gave me a better entry for a buy position. So you can see that gap in price on the 1 minute. I knew that needs to be filled. So that was one of my confluences. That price needed to fill that area. Fill that gap in price. And then hopefully continue up, because those 4 candles, there's no order block there. There's no bearish order block. So it can't push the price down. Or it won't push the price down. So hopefully I was thinking its price is definitely going to push up now. Gosh, sorry. So price has now touched the top of my fair value gap. On my 15-minute fair value gap. And you see price is like kind of pulling back a bit. And now look, it's tapped into that white line 33783.39, which is the bottom of my 15-minute bearish order block, and that's and that is the area I've got all my sell positions in as well. So as you can see, my sell positions have got decreased and all my buy positions have increased in price. So this is when I start to take out all of my buy positions, because it's now hit my 15-minute bearish order block. So I don't need any of these positions open anymore. So that is hedging. It's basically seeing where there's opportunity in the markets to take trades in the opposite direction of the trend. For us, I personally think it's a short-term trade setup. It's not a long-term trade setup, because my long-term trade setup on this US30 trade is an overall sell. I know that this market is selling. This market is not buying. It's not doing a reversal. It's doing a pullback or a retracement to make higher lows or lower highs, sorry. And my confidence is that it's tapped into the monthly order block, and then prices come to my designated take profit area, which is a 16-hour bullish order block. And now it's tapped into the 16-hour bullish order block. I've gone down on a lower time frame to see if it's going to respect this bullish order block, which it did. It pulled back, and now I've got in for this hedge on a 15-minute. But then overall, I know this price is going to sell, because the higher time frames are always going to win over the lower time frames. So this is just a short-term hedge opportunity for me to get in for some positions and get some profit. But to get that profit, I had to have those confluences in the market, such as a fair value gap, 2 order blocks either side. I know my entry and exit points, and having a higher time frame bias. So you can see the US30 sells are getting a bit weaker, but then I've got all these buyers, which is a positive in my account. So I just got rid of that fair value gap because I didn't need it anymore. So this was the overall 4-hour screenshot. So as you can see on the 4-hour, which is the 3371.337 area. This is my 4-hour order block. But then this 33783 area, I know this is my 16-hour. That's the top of my 16-hour bullish order block. So I know I really should have take profit at the top of the 16-hour, because that is stronger than the 4-hour. But because on MetaTrader 4, I saw this 4 on the daily, it had nothing. It only had bullish candles. But on the 4-hour, it showed me this bullish order block. So I knew I could take price to this 4-hour bullish order block, which it tapped into perfectly. You can see. and then on the 1 hour, so we can see that price tapped into the 4-hour bullish order block and then ran up and pulled back. Yeah, so this on 1 hour, it shows it clearly. It actually went to the 1 hour order block, but because I said I'm just taking a safe bet, I didn't want to take it all the way up to this 1 hour order block and then it doesn't play out and I'm holding a trade longer than I have to. That's why this is a lower time frame hedge. Obviously you can take those higher time frame hedges, but for me, I don't want to be sat on the charts all day and all night, because that is 1, 2, 3 hours. That those candles are 3 hours. Yeah. So just to recap, guys, these are 6 steps of how to hedge. So understanding the market structure, current trend direction, fundamentals, and time period. So understanding your overall market structure, like I said, I knew that the price on US30 went into a monthly order block. That's what I mean by market structure. The overall market structure is going to be a sell because it's tapped into a higher time frame bearish order block. So higher time frame order blocks have authority over lower time frames. So like I was saying, like the monthly has more authority over the 16-hour, and the 16-hour has more authority over the 4-hour, and so on, so on. So they should always mark up your higher time frame order blocks, but also if there is lower time frame order blocks that could and your, say, a scalper or intraday, you can get in for things like hedging because it will give you more confluence when you're trading. Know where to take profit, pullback, or retracement areas for your trending market trades. So like I said, know where your take profit areas are, and where those take profit areas are. So there might be, so like I said so I knew that my take profit area was this pink line. That is my 4-hour bullish order block. That's my take profit area. But then when I saw that there was a bearish order block formed, I waited for price to see what it was going to do over the next half an hour to an hour with these candles at the bottom. Is it going to form a bullish order block, or is it going to continue going short for sells? So that's what I mean about know your take profit areas and pull back for retracement areas, because and if it doesn't create those scenarios like a hedge for or opportunities, don't force it. Don't force the trade. So look for all order blocks on lower time frames for short-term hedge opportunities. So basically that's what I was just saying, like look for like order blocks on a lower time frame for short-term hedge. Like I said, sometimes price might have continued going straight down, but this one gave us an opportunity where we can get in for a hedge and a fair value gap as well. So we knew we had a couple more pips than, say, this hedge position above, which wouldn't have given us a fair play in the game. This one gave us a fair play where we could definitely know we could get in and get out. So confirm the hedge trade will deliver with multiple confirmations of confluence. So order blocks, fair value gaps, higher time frame bias, and market structure. So have set rules for when to enter and when to exit the trade. Know your risk to reward when hedging. So my set rules was I'm going to exit this, I'm going to enter this trade when I see this price on the 15-minute pull back into this 15-minute bullish order block. So when I saw price pull back into this 15-minute bullish order block below here, I knew that I could, and I saw the fair value gap. I knew I can get in at that bullish order block and exit my trade at the bearish order block. And I knew I counted my pips of how much I was risking on all those trades and how much I was, what my reward would be. So guys, that is my hedging, how I hedge on a lower time frame. I hope this helps anyone who's looking to hedge. And sorry if it was a really long video and it was a bit overdue, but thank you guys for watching. Please press the thumbs up icon, like this video if you found this helpful, and I would love to hear your thoughts in the comment section below. Thank you for your time, sending positive vibes. God bless everyone. Take care.